So get this, Nigeria, it's one of the biggest crypto markets on the entire planet. I mean, absolutely massive. But here's the paradox, right? A huge number of Nigerians still have to fire up a VPN just to get onto the big crypto websites. And now, on top of all that, the government is talking about taxing it.
Which brings us to the central question of this whole breakdown, right? It's the paradox we're going to unpack today. How exactly are you supposed to tax an industry that you've, for all intents and purposes, pushed into the shadows? It's a real head-scratcher.
Welcome back to the channel, finance people. If you are just finding me, a hearty welcome from the JoshLM finance crew. I'll be your guide today. So get out your pen and pad and let's break this down.
Okay, so let's get right into it. The first thing you got to understand is that crypto in Nigeria, well, it wasn't just some quiet little hobby for tech nerds. No way. It was an absolute explosion, a full-on boom. And it was driven by, very real everyday economic needs for millions and millions of people.
So you might be asking, why the explosion? Well, it's pretty simple when you break it down. People needed real solutions to real problems. They needed cheaper, faster ways to get money from family abroad. That's global remittances. They needed a way to protect their savings from absolutely crippling inflation. You had freelancers, remote workers. They started getting paid in crypto because it was just easier. And P2P trading, man, that just blew up for paying for things like global services. This wasn't some abstract idea. For so many, it became a genuine economic lifeline.
And what this did was create this massive disconnect. It's like two different realities. On one hand, you've got what's actually happening on the ground, a huge, vibrant P2P market where crypto is just part of daily life. But then you look at the official rules, and it's a completely different story. It's just confusion. Banks were told to stay away, the regulations were murky at best, and the whole thing just created this cloud of hesitation for everybody.
So all that confusion, it leads us right into our second point here, what I'm calling the regulatory fog. Because, look, even when the central bank kind of softened its position a bit, the lack of any clear, detailed rules created this massive problem. You had an entire industry trying to build its future on, well, pure guesswork. And that's no way to build anything lasting.
I mean, think about the platforms people are using every single day. We're talking about global heavyweights here, Binance, Bybit, Luno, BitGet. These aren't some tiny startups. They are absolutely crucial parts of the global crypto ecosystem. But for a lot of Nigerians, just getting access to them, well, it's often been a real challenge, all because of that regulatory uncertainty.
So what happens? Well, the unofficial ticket to the game, the de facto requirement to even participate in this global market, became a VPN, a virtual private network. Yep. When official access was blocked or restricted, people did what people always do. They found a way. They adapted. VPN on and business as usual. It perfectly highlights that huge gap between policy and reality.
You end up with this bizarre progression of events. You almost have to laugh. So step 1, restricted. Tell all the banks, don't touch this stuff. Step 2, ignore it. Just kind of let this massive P2P market bubble up in this gray zone. And now step 3, tax it. You want to tax the very activity that you made incredibly difficult to do out in the open. I mean, come on, make it make sense.
But okay, this is where the story starts to shift a little bit. Because the fintech industry itself is stepping up. And look, they're not asking for the Wild West. They're not asking for zero rules, quite the opposite. They're making a very mature, very sensible call for clear, predictable rules. They actually want to come out of the shadows.
In this quote right here, this comes directly from Nigerian fintech operators in a report to the central bank. And it sums up the entire problem perfectly. We can't build the future on guesswork. It's just that simple. You can't attract serious investment. You can't build real sustainable companies when you have no idea what the rules of the game are going to be tomorrow.
So what are they actually asking for? It's really not that complicated. They want structured, risk-based rules. They want clear definitions for things. What exactly counts as custody? What is a tokenized asset? They're pointing to successful frameworks in places like Singapore or the EU and basically saying, hey, let's do something like that. They're just asking for a safe lane to drive in so they can innovate properly and securely.
Yeah, and when they bring up the EU, what they're usually talking about is this framework called MiCA. Think of it as a landmark set of rules that creates a really clear legal structure for crypto. And it's smart. It doesn't treat all crypto the same way. It separates different services based on their risk level and lays out real solid rules for things like consumer protection. It's basically a blueprint for how to do this stuff right.
And when you put the two approaches side by side, man, the contrast is just stark. Nigeria's current approach, you get low clarity for banks, which means weak investor confidence. Consumer protection is informal at best. And innovation, it gets stifled by all the uncertainty. Now compare that to a global best practice. You get high clarity, strong confidence, formal consumer protection, and you actually encourage innovation as long as it's within the rules. It is, quite literally, night and day.
All right, so let's tie this all together. What does this whole complicated mess actually mean for you, for the everyday crypto user, the trader, or just anyone interested in fintech in Nigeria?
Okay, here's the bottom line. First things first, this crypto ecosystem is not going away. It's just too big, too integrated into how Nigerians earn and move money. It's here to stay. Second, for the time being, you should probably expect things to stay in this kind of awkward middle ground, right? A huge market operating with very little official clarity. And really, the biggest missing piece of the puzzle is clear rules around stablecoins and other digital assets. Getting that clarity, that could be the key that unlocks the whole thing.
Which really leaves us with this final, powerful question. In practice, Nigeria is already a crypto nation. The people have decided. They voted with their wallets, they voted with their VPNs. So the only real question left is, when will the rules finally catch up with the reality on the ground? I'd love to know what you think, so drop a comment below. And hey, if you're getting value from this breakdown, do me a quick favor and hit that like and subscribe button. Seriously, we're trying to get to 1,000 subscribers, and every single click helps us get there. Thanks a ton.
Thank you so much for watching. Please share it with someone you love, and I'll see you in our next video. Cheers! And of course, just a quick reminder, this is all for educational purposes only. It is not financial advice. Please always do your own research.